Did you hear me, Mauricio? I forgot to hit the record button for Gaurav. How you doing?
Hi, Dale.
How are you, Jamie?
Thank you.
How's it going, buddy?
How's it going? Hanging in. Oops. We got the thing.
You're
Good, very good.
Yields again moving lower. Um, Decent little bounce here in Euro. Market's so short they can't push it down even with negative news. What's that telling you?
That's right. Classically, what it should be telling us is that a squeeze is unfolding. But, since for about the last 10, 11 days, we've had a number of short squeezes, but we keep getting lower and lower tops. So to me, there just still seems to be supply out there. Until we take out kind of the 130 or 35, 45 area, I'm pretty complacent. I think we hang in this range and potentially test the downside. We've had probably 3 or 4 decent squeezes. Today being the clearest example of can't go down on bad news. But to me, if the market were really exceptionally short and nervous, we would have blasted through, kind of the 134.5 area.
Yeah, I mean, all we need is, to me, above today's highs. It's failed at a line I've had twice. Don't know why I drew it there, but it seems to be acting as pretty good resistance. Back over 34, it would look okay. I'd almost prefer to see a washout, get it out of the way, take out 32.90 for a better euro buying opportunity.
Mm-hmm.
I also wanted to ask you what you're looking for in tomorrow's GDP number out of the UK, because we're at the 200-day moving average here in the pound.
Precisely. To be honest, I hadn't looked at the forecast, so you stumped me on that one.
Okay.
I apologize.
Are you still on vacation?
Feels like it. No, actually, I'm not. Yeah, I mean, the cable is very interesting here. We took out that 38.2% retracement this morning, went down, inched below the 200-day moving average and bounced a little bit. So that's kind of at a critical level here. I'm really having a tough time with Mark Carney. The guy makes Mario Draghi look like an even-keeled character. I mean, I've seen Draghi do 180s from one meeting to the next. Carney, he's just making my head spin.
Yeah, I just talked to a guy who said that in his mind now, Carney has lost its credibility in the markets, and that
I don't think there's any doubt about that.
And that's why that high that we made in the pound up there around 172 might be it. There were up until this break a lot of people talking much higher numbers, 177. I mean, there were all kinds of numbers higher, and that this last go round with him sounding dovish from being such a hawk, that he's now lost credibility with the market.
He moved the goalpost several times to remain on the dovish side of the equation. They used to have an employment target. Once they reached that, they scrapped that, and they said, okay, now we're looking at slack in the economy. Then he came out in the Mansion House speech in June and said, we're going to hike rates, quicker than you think. And ever since then, he's been backtracking.
Mm-hmm.
And the inflation report just this week was quite dovish. So yes, he has lost a tremendous amount of credibility. He went from the rock star central banker to being sort of a laughingstock. It's really, I've never seen such a quick fall from grace.
I mean, doesn't Yellen do the same thing that every time we have good economic news, she says it's noise?
Well, but she's consistent.
Okay.
She's consistently.
She never sounded
dovish,
like a hawk, and then all of a sudden transformed.
So when she turn,
yeah, I got you.
I mean, my expectation would be that when she does turn, she will consistently be hawkish. I wrote a piece yesterday saying, central bankers are supposed to be the cooler heads. It seems as though, certainly in the case of Carney, he's reacting to every little blip that he sees in the economy. Draghi, to a certain extent, because he's trying to paint a picture that isn't there. That inflation will revert to target levels if they do nothing. So he's trying to, in essence, pump up the market's tires without success. He's done that for the last 8-10 months. But Yellen, to her credit, whether you agree with her or not, is consistent in the notion that she would much rather see the economy gain traction and overheat slightly because they can always deal with inflation. They know, higher interest rates work to contain inflation. We know that. Lower interest rates and QE and all those other things kind of sort of maybe work on the deflation front, but we don't really know. And the experience that we've had with it is mixed. It's the best tool they have against something that
worked pretty good over the last 5 years in terms of asset prices.
In terms of asset prices,
right, not
but
in terms of the real economy.
Well, that's it. And their ultimate goal, obviously, I think they would certainly rather see the real economy. They would love to shift the focus from asset prices to the real economy.
Well, we're gonna see with QE ending how this handoff works, aren't we?
Exactly right. And at this stage, it still seems as though they want maximum flexibility to stretch this out as long as possible. They want to see this thing get pumping, and it just doesn't happen. You get 2 or 3 good employment numbers. You think you're going to see follow through in retail sales. You think wages are going to start to tick up, and it just doesn't happen. So I think they're as frustrated as anyone in the fact that these things aren't catching on. The one thing I would really like to see in terms of a lower euro would be wider spreads between the U.S. and Europe. And with U.S. yields kind of tracking European yields lower, I mean, we're not blowing out on the spread side. We've reached about 140 basis points between the 10-year Treasury and the 10-year Bund, but we just can't crack it. So as the Bund comes lower, we were below 1% today, earlier in the day. Yeah, the Treasuries come right down with them.
Yeah, so the TLT Treasuries have almost made new highs. I'm taking heat on that position I have on. And yet the yen, although it looks a little heavy right here, is still sitting way above its lows from a month or so ago. What do you think? The yen have legs, or one of them is right? One of them's wrong.
I think the thing with the yen, I mean, my personal feeling is that I'm taking the BOJ at face value, and they say that they're comfortable with the way that the sales tax hike worked its way through the economy, and that they think they had a great first quarter, they had a horrible second quarter, they sort of netted themselves out, and they think that they're going to be on trend for the rest of the year. So I'm kind of taking them at face value. But there's a growing school of thought that they're going to have to do another round of QE later this year, early next year. So I think that's what's giving dollar yen a little bit of a floor. As well, you've got the pension reforms in Japan, where it looks as though they're going to start putting a greater percentage of assets in the government pension plan into equities and into riskier assets. Some of that going abroad. That's a yen weakening factor. Good for the risk on trade. So I think in quiet markets, that's having sort of a supportive factor in keeping dollar yen up. Though it is very interesting that it's held up very well considering we're at the lowest yields we've seen in treasuries in over a year.
Anything of notice in commodity currencies you're paying attention to?
They've had a nice rebound the last day or two. It seems as though the geopolitical story is sort of taking a little bit of a back seat. It seems that Putin is being less confrontational than he had been in terms of they're trying to get this aid into Ukraine, and it sounds like he's kind of playing ball with the Red Cross. So that I think people are taking that as a sign that he might be softening around the edges a little bit. The sanctions are clearly not only the sanctions, but the Ukraine crisis alone is clearly weighing on the Eurozone economy. The second quarter was flat. You're below par in Germany. I think it's in everybody's interest to come up with a face-saving way for him to extricate himself. That will probably mean him keeping Crimea. Nobody seems to be even bringing that up as an issue anymore. But maybe saying, okay, you got Crimea, that's enough. Withdraw your forces. I don't know if there's a deal to be had there, but I mean that would be the single best thing. If you want to see a euro rally, I think you'd get a very sharp rally if they do come to some sort of an accommodation anytime soon in Ukraine.
Okay, great way to end it on Putin. If Putin relents, the euro expands.
I do. I think that you definitely see a tradable bottom for
okay, buddy.
Into the fall until we see how the TLTRO start to play out.
Thank you, thank you, Jamie.
Okay, but
All right, see you tomorrow.
Take care.